Happy Monday, everybody. I hope you had a great weekend. Today is November 3rd, 2025, and this is your Monday market update. Now, after a record setting October, markets entered the final stretch of the month, facing a potent mix of tech earnings, trade headlines, and Fed expectations. What began as optimism around the Trump Xi summit quickly gave way to concerns about stretched valuations, rising bond yields, and weakening market breadth. Let's recap the week day by day. On Monday, stocks started the week strong as optimism grew over progress in the U.S. China trade talk and expectations for a rate cut at Wednesday's Fed meeting. Tech led the advance after Qualcomm announced a new AI chip aimed at rivaling NVIDIA, and the Department of Energy unveiled a $1 billion partnership with AMD. Amazon's plan to cut 30,000 workers, while grim for workers was seen as profit-friendly for the company. That rally pushed all major indexes to new all-time highs by the close. The Dow was up 0.75%, S&P up 1.25%, and the Nasdaq up over 1.75%. Tuesday saw cautious trading as investors positioned for the Fed's decision coming up on Wednesday. Housing data showed home prices continued to rise while consumer confidence softened slightly. Markets drifted sideways, digesting a two-day 2% rally. A solid Treasury auction kept yields near 4%, and traders debated whether the Fed would deliver a dovish surprise by ending quantitative tightening. The Dow was up 1/3%, S&P up 1/4%, and the Nasdaq was up over 0.75%. On Wednesday, the Federal Reserve delivered the expected quarter-point rate cut, but the big surprise was the end of quantitative tightening, a clear signal that policymakers were leaning dovish. Chair Powell struck a careful tone, acknowledging softer growth, but highlighting still tight labor markets. Markets initially surged, then faded into the afternoon as investors booked profits from the October rally. The big market-moving quote from Powell was that, quote, the December cut was not a foregone conclusion. And then he added, far from it. This was a big surprise for the markets, and the market showed it. The markets were counting on a cut in December, over a 90% chance. After that quote, it was more like 50-50. In other news, NVIDIA did touch the price that made it the first $5 trillion company during the session. Aside from riding a 5-day winning streak, it seems like NVIDIA is playing the Oprah part, making deals with anyone and everyone. You know, you get a deal, you get a deal, you get a deal. Well, we'll have to see how all this plays out, but this is how it's going right now. By the end of the day, the Dow was down 0.25%, S&P 500 down just slightly, and the Nasdaq was up 0.5%. Markets turned volatile on Thursday as the Trump-Xi meeting produced very few surprises. While Trump called it amazing, Xi was a bit more close-lipped. Details were light, and investors focused on Powell's earlier hawkish remarks about the inflation risks. Tech sold off after mixed results from Microsoft and Meta, offsetting a rebound in Google shares. Mr. Softy was down 3%, Meta was down 11%, and Google did pop up 2.5%. Treasury yields tick higher, weighing on valuations. The Dow closed the day down 0.25%, S&P down 1%, and the Nasdaq was down 1.5%. Friday brought a mixed open as strong earnings from Apple and Amazon lifted futures. Apple beat on iPhone sales, and Amazon's AI-related revenue guidance sent its shares up double digits pre-market, but the enthusiasm did fade through the day as bond yields resumed their climb and market breadth continued to narrow. Only 53% of S&P 500 stocks remained above their 200-day moving averages. Traders grew wary that a handful of mega caps would continue to carry this entire market. The Dow closed up 0.1%, S&P 500 up 1/4%, and the Nasdaq was up 2/3%. It was a choppy but constructive week to close out October. Investors digested a flurry of data, central bank action, and cross currents in tech earnings. For the week, the Dow was up 0.75%, S&P up 0.75%, and the Nasdaq was up 2.25%. The month of October wrapped up not too spooky. For the month, the Dow was up 2.5%, sixth positive month in a row for the Dow. That's the first time since 2018. S&P 500 was up 2.33%, and the Nasdaq was up 4.75%. While headlines from the Trump-Xi meeting dominated the narrative, the real story was under the surface: thinning participation, stretched valuations, and continued rotation within tech. Analysts noted that only about 29% of the S&P 500 companies themselves are beating the index year to date, a reminder that this bull market rests on increasingly narrow ground. We go into this week and this month still in a government shutdown, in addition to delayed flights and government employees not getting paid, while the politicians, who are getting paid still, blame each other daily. That will mean another jobs week without government jobs data. We will get ADP for the week on Wednesday, but another week without a major puzzle piece for the Fed cannot be helping. Earnings reports are still coming out. This week we'll get more tech and some pharma and others too. Palantir, AMD, Pfizer, Disney, Uber, Eli Lilly. That just to mention a few, but there's a lot more than that. As I said, we'll get some eco data, not government data, but some eco data anyway. ISM Services Index. We'll skip jobless claims and productivity on Thursday, and we should get some University of Michigan consumer sentiment numbers on Friday. This week features one of the busiest Fed speakers calendars on the quarter with 11 scheduled appearances across the U.S. and Europe. Today we'll get Daly and Cook. Tomorrow we'll get Bowman. Thursday we'll get Williams, Barr, Hammock, Waller, Paulson, and Musalam. We will wrap up on Friday with Williams again, Jefferson, and Miran. It is a full lineup that could shape the post-cut narrative, especially Waller, Jefferson, and Williams, whose remark will be closely watched for signals about December's policy moves. As I've told you, I find that they put out those test comments to see what the markets think. With market breadth faltering and sentiment stretched, expect two-way volatility as investors test whether the late October breakout can hold into year end. There is a lot to watch, and I tell you, keep an eye on the wild cards. Government's going back to work, maybe. We'll see. That's not in sight yet, but we'll see. Tariff Supreme Court case, elections, more tariff adjustments, and the Oprah deal making. Please keep your eye on the goals as we continue to work on it. Please help us do the risk audit you need. Your goals may drive your risk. What does it need to be these days? Have a great week and keep planning.